Greetings, folks. This is DC Investing. Reach financial independence, and I'm talking about topics that can help others on their path to reaching financial independence. And one of my favorite sectors is the energy market, particularly the energy pipelines, oil and natural gas. And it's kind of interesting that all of those companies have been kind of weak over the past month. And if you don't follow this sector, it might be a nice buying opportunity if you want to get into some nice dividend-paying stocks. And I had reported in a past video that all of the pipeline companies that were master limited partnerships seemed to be really weak, whereas the pipeline companies that were more corporations that sent you a 1099 instead of a K1 statement seemed to be pretty strong, which I thought was really kind of weird because they all kind of operate in the energy infrastructure. It was kind of interesting. The price of oil took a big dive, and I noticed that some of the pipeline master limited partnerships kind of percolated up the day before oil actually went up. So I don't know if some folks in the know had previous knowledge that something was going to happen and the price of oil was going to go back up again. It's always kind of interesting to look for little things like that. But several of the master limited partnerships like Energy Transfer, Energized Production Partners, MPLX, they all kind of bumped up a day before the price of oil took off, which was kind of interesting. And then on the flip side, the some of the Schedule C, or not Schedule C, but the C corporation types, they all kind of fell off. And I think the catalyst for that was, I think Kinder Morgan did a report and they were weak in some area or another. And that was kind of like the 20th or 22nd of October. And it took a dive. It took down Williams. It took down, what was the other one? Antero Midstream. Not exactly the time, but like AM, WMB, and KMI, they all really came down from their highs. They had been really strong. And then all the master limited partnerships are starting to kind of percolate back up again after hitting a low. So, overall, if you're looking for kind of a sector that's sort of been down, these pipelines seem like a really good buy right now. You can buy an ETF so that you don't have to deal with the K1 statements. The two that I know of that are MLPA and AMLP, and the yields are really strong right now. Like MLPA, I think I looked today and it was 7.7%. AMLP was 8.3%. So those are really good yields. There's another one that's MLPX that owns more of the non-master limited partnership ones. I think that had a dividend yield of 5.4%. But if you're looking for something that creates a lot of yield, these things have all come off their highs, which makes the dividends go up, and getting a yield somewhere between 7.7 and 8.3% is really healthy. If you end up saving $1 million and put it in, you can split it across both of those ETFs. I mean, they kind of own the same things, but if you're getting near 8%, that's $80,000 a year of passive income, and there's a lot of folks that can live on that. So, if you're looking for something that throws off good dividends, maybe take a look at that sector. If the economy goes into recession, they'll still go down. If oil prices go down, they'll go down somewhat. They'll probably still keep paying their dividends, but maybe not so long term. If we really go into some difficulty, the whole energy sector will get hit. And I don't know, that's something to kind of take a look at. And I love the dividends. I own a lot of those companies. I think I own every one that I learned about in varying degrees, because I just want to spread or diversify a little bit, but I really like the energy pipeline. So take a look at that. Let me know if you guys see anything else about the energy pipeline system. Like, subscribe, and thanks for being a viewer. We'll see you. Bye.